Everybody to this week's edition of Selfwealth Live, the technical analysis edition. My name's Roger, I'm from Selfwealth, and this is Jason McIntosh from Motion Trader. Hi Jace, how are you today?
Hey, Rog, I'm good. Plenty going on in those markets at the moment. So looking forward to having a chat about them and looking at some viewer stocks. So yeah, all pretty good.
With a scare going on, but it seems like there's been a bit of a recovery tonight as well. So it'd be good to have a chat about what's been happening in those markets. Welcome everybody on the other side of the line. Thanks for coming again for another great week here. Don't forget to pop your tickers in as soon as possible. We'll get through to one of them, one from each person. But before we get to your tickers, obviously we're going to analyse the Australian market, the US market, and the Hong Kong market from a technical analysis point of view once again. If you've got any great general questions to ask, then feel free to put them in and we'll see if we can get to them. But obviously the main part of the show is having a look at your tickers as well. So like I said, one from each until I draw the line in the sand, and we always try to aim for that 1 hour mark. But anyway, thanks for coming along once again. Let's get into the show, Jace, for another big week. We're in the swing of things in 2026 for our third show now, so let's just start off with our disclaimer if you can.
Yes, everything we do today is general commentary, no personal advice and anything that we talk about. And I'll quickly put on the disclaimer that we have a look at each week. And the other point to note is I'm not part of Selfwealth or Sci-Fi. I'm Motion Trader. My business is Motion Trader, and you'll see my details at the top, licensing, general commentary, all of that. And beneath there, the Selfwealth disclaimer goes through those same important things, licensing, general commentary. It is all in that little graphic.
Fantastic. Thanks, Jace. Like I said at the beginning, there was a bit of a scare amongst, especially in the gold, especially in the commodities, gold and silver. Let's start off with that Aussie market, though. How's that shaping up today?
Yeah, okay. So we'll go over to our charts. And the first one up, as usual, is the ASX 200. So last week we spoke about the stepping pattern, which you can see on this chart of the ASX 200. And starting from the November low, you've got like a strong rally followed by a short and shallow pause, and you can see it all the way up. Another strong rally, a short pause, strong rally, another pause, and then last week the ASX 200 took another step higher up to, I think that might be what would that be? That'd be a 3-month high last week, before pulling back at the end of the week. Even with the pullback, there's a clear sequence of rising lows and rising highs in this price action. And that sequence of rising lows and highs is the underpinning of a bullish trend. The other thing this chart is telling us is that the dips are being bought, and you can see that from the price structure. The pullbacks have generally been pretty shallow, and you can see the buying interest has supported the price before prices rally again. And when you get those shallow pauses, it's usually that sort of sign of the buying interest absorbing the stock that comes on the market. Now, this latest pullback that came about towards the end of last week, that's been the sharpest so far, and we got a quick pullback to the moving averages. So the 50 and the 100-day moving average are both in close proximity to one another at the moment, and so that pullback's come back to those moving averages. What's encouraging here is that the prices are already finding support and they're rebounding. So the buy the dip has snapped into action so far. I think the key now is for prices to stabilize above the moving averages, and maybe like all sorts of ways this could play out. But like one scenario would be like you get several weeks of chop, just back and forth sideways above the moving averages, and then from there maybe that could set the market up for a push to new highs. As I say, lots of ways this could play out, but the key at the moment is to see whether we get this stabilization above those moving averages. A break below the averages, a breakdown from here, well, that would probably see us move towards a longer consolidation. But let's see how price action develops from here as it is. If we get this break below the averages, we can look at that then. At the moment, let's see whether we can get this consolidation above the averages and stabilization above the averages. I think the key to the next push in the ASX 200, it could come from the financials. So let's just jump across to the ASX 200 financials index, and prices remain below these declining moving averages. But I think the encouraging thing is that the prices have actually stabilized. And just look at what happened the week before last. We had this, look at this breakdown. Prices broke down below their January low. And the thing was, we got that breakdown, but there was no follow through selling that came after that. And prices have then quickly reversed and are now testing back up into the moving averages. The fact there wasn't follow through selling and instead prices snapped back, it's a sign that buying interest might be starting to emerge. And of course, financials are a key sector in the local market. There's still a bit to do to turn this around. So the moving averages are still pointing downwards, but it's encouraging, what I just went through then, and encouraging that prices are back here. They need to get back above the averages. I think the key levels to watch now. Let's keep an eye on this high from mid-January, which is pretty close to where prices are now, and let's keep an eye on the low from a couple of weeks ago. I think whichever breaks first, I think that's likely to lead to the next round of momentum. At the moment, it looks like that January high might be the one that breaks. And if financials start to move higher, it's supportive for the market generally. A quick look at the equal weight, the ASX 200 on an equal weight basis. It's pulled back. It's pulled back quite sharply to the moving averages over the last week. It hasn't been a shallow pullback like we've seen in the past, like we were discussing earlier with the ASX 200. This is quite a sharpish decline. When you get a strong rally followed by an equally notable decline, it's often a sign the market isn't ready to go higher. I think that points more towards that consolidation scenario we were talking about with the ASX 200. Overall, I think the upward trend remains in place, but near term at least, I think consolidation could be the order of the day. For me, it's a case of holding positions which are working. I've got my trailing stops in place. If stocks come back, I'll just clear them out of my portfolio and wait for new opportunities to emerge. But at the moment, it's holding what's working, keeping those stops in place, and always just managing risk.
Okay, fantastic. So nothing changes. No need to panic if we have a plan, right? So let's have a look at the US market, please.
Okay, so the S&P 500, well, underlying trend remains up. We've got these rising moving averages. That's still the case. The 50-day, the 100-day, they've been rising since back down here in May, and that's the game hasn't changed from that perspective. So this is and with price above the moving averages, that's a bullish structure. The S&P 500, it continues to lack near-term momentum. It's really been much of the last I think it's 3 months have been spent just tracking sideways to slightly up. So it does lack that near-term momentum. If anything, it looks like maybe the S&P 500, maybe we do see some more consolidation. Maybe we do see another retest of the moving averages in the near term. The biggest drag on the S&P 500 has really been the big cap stocks. It's been like the Magnificent Seven, the Nvidias and the Apples and the Microsofts and the like. That's what's been weighing on the market. I'll show you what I mean. This is an ETF, a Magnificent Seven ETF, and you can see they've really been stuck in this range since late October. Whereas other sectors of the market have hit new highs, like the Dow's hit new highs, and the S&P's, it's grindingly hitting new highs. The Russell 2000 small caps, new highs. The Magnificent Seven, well, it's stuck below its October high still. And it makes it difficult for the index to move higher when this big section of the market, this big capitalisation section of the market is pulling back. As we discussed last week, this remains in a consolidation phase. I think it's positive that prices have moved back above the moving averages. It had a brief foray below them about a week and a half ago, like tested the November low. Didn't get follow through selling. It's pushed back up. So that really starts to firm up the range. And you can you can see, and we just put some lines on this chart. You can see the that rally off the November low. It really now starts to firm up this as a range, and so yeah, I think the positive here that prices have moved back above the averages, that disengages any downward momentum that could have been building about a week and a half ago. But as I say, it's still a range-bound market until we get a breakout. It's likely the S&P 500 is just going to continue to be held back. You really need these big cap stocks performing. The levels to watch, I think, the low from a week and a half ago, and the and probably the December high. Whichever of those breaks first probably leads to the next round of momentum. Another reason I think the odds favour the bullish side. It's due to what we're seeing in the equal weight. So coming across the S&P 500 equal weight, and just looking at the price action over the last couple of weeks, it really has been a shallow pullback from the recent high earlier this month. It's really not a great deal of momentum to the pullback. Would call this another shallow dip, and shallow dips, as we've discussed earlier, is a sign of buying of the dip. Big tech continues to be the missing factor, but I think it's positive that we continue to have that broad participation across the indices. It's not just the S&P 500. We're seeing it, as I was saying, across like the Dow and the small caps and so on. I think the play here, I think it's staying long. That underlying trend remains in place. I think it's continuing to do what's working and doing so until we have cause to do otherwise. And that's where a good exit strategy comes in. If a trend breaks down, well, I don't want to just hold and hope for a recovery. I want to have that clear cut plan to protect capital. But at this point, particularly when we look at something like the equal weight, that trend does still remain up.
Yeah. If we could just before we move on, I just wanted to go back to a point in the previous ETF, the Magnificent 7 ETF. And I just, to me, it's looking at the simplicity of, I mean, are we in 2020? No, I actually like those lines there. So, but that's okay. You know, are we looking at a year of 2026 of consolidation? Obviously, we don't know, but at the moment, it seems to be just bouncing in the middle there, right? In most of these indices. But the simplicity of us going, there was that bottom line there. If it breaks below there, we need to be cautious. If it breaks above there, we're a bit more bullish, right? So this is why time and time again, for me, it confirms why what we do and what we teach will help anyone and everyone, whether you love reading about the fundamentals and learning about why this is all happening in the news, or whether you just like the technical analysis. The simplicity of what we teach makes it really worth going, right?
Yeah. Look, I think it does. We can all have anyone can have a prediction for what the market's going to do later this year. But as it stands, these big cap stocks they do lack momentum. But a break either way then sets the tone for momentum, and then that leads to trends, and it's and building rules around what to do when you do have sideways trading and then breakouts from sideways trading, following them consistently, using exit strategies when things fail, and I think that the odds in your favour for doing well over time. Doesn't need to be complex. In fact, I think the best trading strategies are fairly straightforward. It's keep it simple, keep it consistent, and keep your discipline.
Exactly. All right. So Hong Kong now looks like that's come back as well to a level.
Yeah, well, this has been interesting. This is it's probably a little bit of a concern the way the price actions played out here. Prices broke higher from a range just recently. You can just pretty much put it in there. Different ways to work out the range, but yeah, that's roughly the range. Had a breakout last week. That all looked good, and then no sooner had prices broken out is we're back down here inside the range. So that's I think that's a cause for being aware of what's going on. When you don't get follow through buying. So when you get one of these breakouts and you don't get, you can sometimes often get a pause following the breakout, but then you get the round of secondary buying. When you don't get that follow through buying and prices quickly reverse, that's what we call a false break. And false breaks can be a sign that the market, sometimes false breaks mark tops in markets. So I'm not necessarily saying that's the case here, but it's something to be aware of. I think the trend here still remains up. Like you look at the moving averages, they're still pushing higher. Prices still above the moving averages. So from that perspective, the trend still remains up. But this is something I want to watch closely over the next, maybe over the next week or two. See whether prices can stabilise above the moving averages and start to push higher, or are we about to see prices move well back into the range and below the moving averages? So it's a developing situation. If prices can stabilise around current levels, then maybe it's just a case of more consolidation. Like you couldn't rule out that we just get more consolidation around the moving averages. Things just aren't ready now, maybe, and then from there, maybe we get that move higher. So I wouldn't rule out the uptrend at this point by any stretch, but yeah, it's just not the price action I was expecting following a breakout that it would come back down. So I think it's still bullish for now, but it's a cautionary sign. And when we go over to the Chinese market, well, this has continued to pull back, made a new, its lowest level since October. So what's that? A three-month low or so just yesterday. I think the overall trend remains in place. So when we just we take this chart in, like from the January 24 low, it's still a series of rising lows, and this is still a sideways movement into and just below the moving average. So I'd still call this an upward trend, but it's currently at the lower end of this recent range that you can just map it in there. Yeah, we're really trading at the lower end of this recent range. So it's important now that prices rapidly get a foothold and start to make their way back above the moving averages. A breakdown from this point would start to really cause some technical damage. I think the potential for this ranging period to resolve to the upside, I still think it's very much open, but we really need to see the buying of the dip emerge soon.
All right, thanks for that, Jace. All right, let's get on to some tickers now. Before we get onto that, we are going to get into commodities. Jen, hey Jen, thanks for the praise once again. I don't know why you might not have been able to get onto live chat, but it seems you're on now. Sorry if I don't think it's out of our control. I don't know what happens there sometimes, but good to see you back. Bob, thank you. No panic here. I was thinking gold and silver may increase but a slower pace. So, well, let's get onto these commodities, Jace, because obviously gold and silver, what are your thoughts around them at this point?
Yeah,
Going?
So quick look at gold first. Now, look, this is something I speak about at length in my Friday strategy session, and what I've been saying for several weeks was that be prepared for volatility. Volatility is probably not too far away. When you get these moves that accelerate higher and pull away from the moving averages, like one of the things I've been showing my strategy session members each week. Let me just put this on. This is an indicator which shows how far the price is from its moving averages. And I've put this onto a weekly chart. So this is a 50-week moving average now. And there's the gold price on a weekly basis. Now I can just compress that. And it's even more extreme in silver. There's where prices recently were. So that takes us back to 1980. So since 1980, over the last 46 years, gold has rarely been this elevated above its 50-week moving average. You can see when it gets that elevated, it often snaps back. So this is something we've been highlighting a lot over the last couple of weeks, and it's been a case of sometimes, like, I always like to let profits run, but this hasn't been a normal trend. Particularly in silver, it just is an exaggerated version of this. It hasn't been a normal trend. So in that case, I've been scaling out of some of my positions, particularly in silver. And because this has always been the risk. It's like, let's stay in the trend as best we can, but let's not just keep piling risk onto the trend as it becomes more and more extreme. Let's do the opposite. Let's think about just scaling out of the trend. Whereas you find, like, so many people, they see it on the news and they start piling in to add to their gold stock positions during the euphoric stage, and then the hot money's all in, and you get the rapid drop. That's what we've seen. So I think the overall trend in gold remains up. At this point, I'm looking at this as a big shakeout, and it has been extremely volatile, I think, for a lot of portfolios, particularly those who got overconfident, who just piled in. But this is why we've always got to respect risk. Don't expect something is just going to keep accelerating higher. At some point, extremes, like an extreme can always get more extreme, but just remember that volatility lives in the world of extremes. And that's what we've once again found out with gold. So far, it's come back to the 50-day moving average. It's getting a rebound off there. I'm not expecting new highs in anytime soon. Now that the this buying phase has been interrupted, and we've got a shakeout underway, it could take several months. Could take I don't know. It could take 6 months. 6 months of prices back and forth, and like look what happened this period over here. There's an accelerated advance in gold, and once it started to decompress and come back to the 50-day moving average, it took time. Like, not to say that this is going to happen. It won't play out exactly like that, but that's April 25 to August 25, let's say 6 months. There's a 6 month sideways consolidation. Anything could develop, but it could take time. So I think with gold stocks which are well in profit, wide trailing stops, we can potentially see off volatility. I think it's too early to be going in looking for new opportunities, and it's if someone's got too much and they're still hanging in there, if we get a rebound, that could be the opportunity to maybe lighten up. But I think the real time to have lightened up was prior to Friday's decline.
Yeah, okay. And maybe you've answered this in what you've just said, but just to be a bit more clear, we've got a question from Sydney around this. Where would you see a re-entry point, or you wouldn't right now?
I'd just like to see how it develops. It's. I suspect it's not a case of down and then straight back up. Like, once the euphoria of this vertical phase has been disengaged by a sharp decline, it doesn't. It can take a bit of time for it to be able to re-engage, and we can look at some other sharp periods in gold. Like, there's another sharp acceleration. There's a sharp sell-off back to the 50-day. This was the start of a 2.5-year sideways phase. So not necessarily to say that that's going to happen, but that's more of a V shape. Looking that was the COVID period there, where you got a sell-off and then you got a sharp rebound. So I don't know that we're looking at that sort of price action, but it's interesting just to look back over time at gold when it does have these. These vertical peaks, it can lead to time. It can lead to time before you get a rerun. Like, even if this was just midway through a much larger trend, like, see, there's a sharp advance followed by again that looks like 6 months. It's 6 months of consolidation back to the moving averages and around them. So if we started to see price action, which was starting to look like it was basing, that's where I'd start saying, look, that could be a time to start, buying the dip. It looks like the dip's being supported. Now could be the time. Then we get a rally off the averages. It starts looking good again. But that all takes it takes time for that to happen. Big sell-offs do technical damage, and technical damage usually takes time to repair. So I think the excitement's over for the time being on the upside. Just for me, I've got plenty of core positions. I just continue to hold, and I've lightened up my trading positions in previous weeks, and now it's just see what the price action gives us.
Give it some time, and I guess even now, for people that not look following us, even if they were to enter now, like where would you manage your risk? Where would you like? There's no sort of market structure or near term market structure to be able to manage risk right now. So I think the idea of allowing price action to develop a little bit and forming a base will give you a better understanding of where you can manage risk if you do re-enter, right? So
Like just looking at looking at this decline we had back in October, you had the sharp down, you got a bit of a rebound, then you got a retest of the low. So, and that's like your zigzag type shape. So we've had the sharp sell off. Like it's possible we get a strong buy the dip reaction as people who saw the previous advance think, okay, this is now my chance. And then from there, it could then start to lose ground and make its way down and make make a new low, But that could be several months away, and then that dip could be bought and starts to make its way up, and then starts to base, and over many months you get like a basing structure which can then support higher levels. That's entirely possible, but it just takes time, and it's not simply a case of, oh, gold's on sale today, let's go and buy some because it's going back up. It may well do so, but it may do so via an excursion to new lows. So just there's risk to be managed, and I just feel it's a little bit too early to be thinking, okay, where am I going to start getting some?
okay, that's good. Good sort of guidance. Too early. Too early. Let's allow the price action to establish and see where we go from here. All right. Let's have a look at other opportunities. Let's start getting onto our tickers then. We're going to start off with MJ Gal. Hey, g'day. How you going? Would love your opinion on EMV, please. EMV.
Not really doing much at the moment. It's sitting below these declining moving averages. Uh, it's like it's neutral for me at the moment. It's not being sold off aggressively. So it's possible this is sort of like it could be a basing sort of phase. But look, it had an attempt to rally, but that rally wasn't. There was no follow through buying. It was sold into, and prices came back to where they started. So that's a sign that a stock's not ready to keep going. Look, to get interested in this, I really need to see it above the moving averages, become established above the moving averages, and then start to break higher again. Probably a little bit early for me. Even if there's not significant downside in the near term, it could continue just to drift sideways for months and months and months. So I'd rather get involved when there looks like there's some emerging momentum. At the moment, we just don't have that. Like you could say, look, I'm just going to buy some here, and I'll put a stop just a few percent lower, and sure, that could work, but it also could just grind sideways for months and months and months. So that's why I prefer to buy into some momentum, and then see if it can start to run. But probably one maybe I'd be watching now rather than acting on.
All right. Thank you. Hi, Roberto. Let's have a look at MEI. M for Mary. EI.
So this is a gold orientated stock. I'm pretty sure it's a gold orientated stock, which it's held up fairly well given the volatility of late. It's not really tracking the gold price. You can see this big move lower in October. I think it's more of an explorer situation. I'm not sure on the details. But look, if I was holding this one, I'd be happy to hold this at the moment. Probably wouldn't buy it with all the volatility going on. It's like it's had that pullback to the averages. If I was looking at buying some, I'd probably like to just see it stabilise here. Uh, we got some back and forth along while the moving averages come up. Maybe buying the breakout or buying more of an established base. But yeah, look, I'd be happy to hold this one at this point.
All right. Hi, Kirby. Let's have a look at HMC, please.
What was that again, Rog?
M for Mary, HM for Mary C.
Yeah, this is interesting. Is this starting to develop into a trend? It may be. Look, it's had this big down and out period where we would have just pushed to the side, not worried about it, not looked at it. But now it's moved from below the averages to above, and the averages have crossed, they're moving up, and we're getting this consolidation above the averages. So it's becoming established above the averages. The trigger for me now would be a break to a new high. I'd be watching the January high, and if it breaks above there, I'd be considering. I could consider an entry around like maybe it's 476 thereabouts. And if that were the case, and that would probably trigger a motion trader signal in this stock as well, um, possibly a 20 to 25% stop just back below the moving averages. Lots of upside potential looking at where it's come from. So that would be an asymmetric play. If we can risk 20, 25%, potentially, like could this stock double? Could it get back towards 850 or so? Yes, it could. Doesn't mean that it will, but it certainly could, and it could go even higher. So that's asymmetric for me. Upside potential is greater than the downside risk where we can put our stop. And I think this is an interesting one to keep an eye on. I'd prefer not to jump the gun and buy some now because it could equally just start to ebb away again. That's why I'd prefer to go with the breakout. So we've got the initial push higher, we've got the consolidation, and now the confirmation of a trade for me is a break to a new high.
Okay, good one there to look out for. Hi, Shamita. Let's have a look at LTR.
So I've got some of this one, and it's had a sharp pullback, but then so too has the whole lithium space. And there's been some sharp pullbacks across a lot of the commodity orientated stocks generally, not just lithium or gold or silver, but we're seeing it in copper and uranium. So nothing untoward here at the moment. This is an uptrend. I'm happy to stay in this trend. Give it lots of room to move. My stop's way back below the 100-day moving average. Look, I wouldn't be. I'm not looking to buy anything at the moment. There's just a bit of volatility generally around, so I'm a little bit cautious towards doing too much buying just at the moment. It's more keeping what's working for me, and this has been working. I'm in from down here maybe around August, September. So it's been a nice advance so far. So, and I've stayed on this because I've given it room to move. You can see there's been other sharpish pullbacks to the moving average, and the way I've stayed on this trend is to give it that space to come have those pullbacks. It's now having another pullback to the average, and I've got that wide stop. I'm prepared to give back a fair amount of profit for the potential of staying on a much larger trend, because I know that's where I make my money from the really big trends, not just picking up 40 or 50% here and there. It's picking up 300, 400% when a trend really does get going. So that's why I risk giving back a decent portion of a gain for that possibility of staying on a bigger trend. But for now, look, for me, I think Liontown's still on an uptrend. I'm happy to stay on it until it gives cause to no longer be there.
Fantastic, thank you. Hi, Aka. Let's have a look at FRS.
Sorry, Roger, what was that?
FRS.
Yeah, uptrend still in place. I'd just be letting this one run. Not one I'd want to buy here because it has pulled away quite a bit from the moving averages. So, where do you put your stop? If you were to buy it at current levels, where's your stop? Like you could have it just below the recent lows, but that's just, that day-to-day volatility could take that out. And then you say, look, back below the 50-day moving average, and you're looking at 30%. That's probably a bit more than I'd be comfortable with. So it's just one I'd be happy to let run, depending on where someone's in from. Like, you could say, look, it met a bullish criteria back down here at 4 cents. So if someone's in at 4 cents, it's now at 48 cents. Well, that's the sort of position I'd be looking to just probably scale out from a little bit because that's a super gain. So it depends. We often talk about this scaling out above 300%. I might trim a bit off the top, particularly from lower price stocks or trends that really accelerate rapidly. And this probably fits both of those criteria. But yeah, I'd certainly have a core position which I'd continue holding.
Thank you. Hi, Peter. Let's have a look at ATR.
Probably a bit of a neutral on this at the moment. Like it's interesting this big spike upwards we had. It wasn't sustained at all. It came down as quickly as it went up. So whatever sparked that enthusiasm to buy, there were sellers more than happy to distribute stock into the rally. So that's a sign that there's there's more than enough interest in selling to keep this stock down at the moment. It's not ready to run just yet. So that's often a sign for me that look, maybe I don't want to be there at the moment. It's just trading around the moving averages. I think to sort of get this one moving again, really needs to break a previous high. So we can look at the most recent high from January, a break above that mid-January high. That would start to give it some upward momentum, which then we could say, okay, let's see where this momentum goes, and we can have a stop below the recent lows. But at the moment, with it just trading down the lower end of its recent range and below the moving averages, I'd be inclined to leave it alone. I wouldn't be buying it here. If I'd bought it on that initial break higher, look, I'd probably be close to look. It hasn't worked out. I'd be maybe looking to exit it, particularly if it broke below the that low from a couple of days ago. Then we just start getting lower lows and lower highs, and maybe it just at best it meanders sideways. At worst, it makes its way down to down into the low 50s and below.
Okay, thank you. Hi, Alessandra. Let's look at CIA.
Yeah, just like Liontown, got that sharp pullback to the moving averages. Was all looking good, looking really good recently in that we had this stepping movement higher, above the moving averages, established above the averages, secondary break, strong rally, pull back to the averages, rally, consolidation, rally, consolidation. But the most recent consolidation has then given way to a larger pullback to the 100-day moving average. If I had this, I could continue to give this some time to work itself out, and I would had I say I'd bought it in November as it was breaking higher. Got an initial gain, but it's now pulled back, probably a little bit below maybe where I got in. But that would be okay. I could still be using that wide initial stop on this. It could well stabilise around current levels. We of course never know till we look back which ones stabilise and move higher and which ones fail. So that's why we just got to give them a bit of time and a bit of room to sort out what they're going to do. It's not a buy for me at the moment, but it would be a hold. I'd want to probably see it holding around this 100-day moving average, not going too much further below it. If we end up down towards $5.20 below the moving averages and the moving averages turning, then maybe we need to reassess it. But at the moment, I could continue to give this the benefit of the doubt.
All right, thank you. Hi, Reggie. Let's have a look at ALL.
I think this has had a bit of a tumble, and it has down below these declining moving averages, and you can see like we talk about a stock's vulnerable when it's consolidating below declining moving averages, and that's how this one's continued to play out for the last 3 or 4 months perhaps, and then the most recent sideways consolidation into declining moving averages has resolved to the downside. If this was in my portfolio, I'd be letting it go and protecting capital, because the problem we have now is that it's making new lows below declining moving averages, and it's one of those stocks which could make its way, considerably lower. If we hold on now and hope for a recovery, we've got to do the what if. Well, what if we don't get the recovery back above the moving averages? What if in 6 months' time it's at $40? Then what do we do? Is that something we can accept? And if the answer is, look, I can't accept holding this at $40, well, it's probably a case of having to consider, what do we do now? For me, it'd be one I'd be letting, I'd be letting this one lead my portfolio.
All right, thank you for that. Hi, Peter. Let's have a look at. We've done one for
And look,
Peter.
and Rog, just on this, look, I would have said exactly the same thing here. Here's a similar sort of situation. I'd be saying exactly the same thing here. This is from 2022. I'd be saying, what if it continues to make its way down below 30 and so on? And it did, as it turns out, it did continue to make its way down to around 30. But if you some people would have just continued to hold, and if they're patient enough and holding their portfolio for long enough, it eventually based and started to move higher again. So it's not to say that you can't hold a stock that's not performing. You've got to work out what your strategy is. Like, do you have a strategy, or are you just hoping if I hold long enough it comes up? I think if you're hoping if I hold long enough it comes back up, I'm not sure that's a winning process to take forward. Yes, it can work out, but it can also completely flop. We can go through a number of stocks where if you've just kept hoping and holding, you've done 95% of your money, and then eventually out 100%. In the fullness of time, if we look at where ALL, if we look where Aristocrat is now, it could continue to fall, but then in a couple of years' time, maybe it's back up. But holding and hoping for that, I don't think is a great way to manage risk. So you just people have got to make these decisions for themselves. Like, am I going to have a risk management strategy where a loss gets to a point where I say, look, enough's enough, I'd protect capital because I don't know what the future holds? Or am I just going to bottom of the portfolio, put it to the side and just hope it comes good in time? For me, it's the former. I think the latter's dangerous, but it's a decision everyone needs to make.
Of course, that's a good point there, Jace. Once again, we're sort of teaching more active strategies, actively managing your portfolio and rotating stocks that are no longer doing any good in your portfolio. If you've got the strategy to be able to hold a stock for a long time, and that's part of your goals and objectives, is a different story, right? So,
and of course, if you sell a stock like this in its downward phase and your money's off doing something else, maybe getting a stock that does really well over the next 12 to 18 months instead of holding something which is doing nothing except going sideways, and you're not quite sure what it's going to do. So rather than worry about will it come good, will it keep doing whatever, if it's not working, move it on into something else, see whether that works. If it works, keep it. If it doesn't, move it on again, get another one, and just keep rotating keep rotating, looking for strength, looking for sustainable strength. If you get it, keep it. If you don't, it just keeps looking. You just keep looking for those. It's trial and error till you get the right trend. Let the right trend run, and until you do, let the errors be small. So when you get the wins, hopefully you get the big wins.
yeah, fantastic. All right, hi, Blue. Let's have a look at PNR, please. P for Peter.
PNR. Look, gold stock. It's performing quite. I think it's performing quite well. It's like, if you just didn't know, we just take away all the excitement in gold over the last couple of days. If we just call this chart up, it's just a stock which has had a big run and is now having a sideways consolidation. It sold off on the had the of course it had the panic selling on Monday, which is now partially recovered. It's a sideways trading range. If I was holding this stock, I'd continue holding it. I'd have my wide trailing stop. My wide trailing stop gets triggered. Well, okay, I'm out. But for now, it's the trend remains intact. I wouldn't be buying. I'm not in a hurry to come steaming in and buying a whole lot of stuff in the sector at the moment, as we discussed. But I'd be happy holding this one for now, and if unless it comes back down to my trailing stop, and it's a motion trader stock, I'm pretty sure. So there'll be a calculated trailing stop for this particular stock.
All right, fantastic. Thank you. Hi, stock follower. Let's have a look at XHJ, Healthcare Index.
Okay. Not working, is it? Below these, it's interesting. We've got these on from an earlier time, and it's really just been. You can see it's largely been a range-bound market since its highs pre-COVID. Look, it's just not working at the moment. It's below declining moving averages. It might become a great buy at some point, but it just doesn't seem like there's a hurry to get into it. Is this the low? Well, we could have said the same thing in November. We could have said the same thing in September. I think the odds favour there are new lows in the new lows coming, and the odds favour that simply because the path of least resistance remains to the downside. I'd just leave I'd leave this sector alone for the moment. It's it makes we can reason out fundamental reason why healthcare should be a growth sector, but it's not what the price action is telling us at the moment. Its time has not come.
Okay. All right. Hi, Elisa. Let's have a look at SGP. SGP.
Continues to weaken. The moving averages are in decline. How far from its high is it? It's mm, it's it's a bit of a trickier one to say right here. Has the trend actually turned down, or can we say it's still an uptrend, which is having a pullback? Like it still does have a series of rising lows and rising highs. It's sort of on the cusp of saying, look, the trend really has changed. Like, could it be like this period here where we did have some declining moving averages? So here we've got, it's making some new lows. We've got the moving averages have turned lower, but it didn't turn into a long-lasting downtrend. It was all part of a pullback. It's possible that's still the same there. If I was holding this from lower and good levels, I could probably give, like with a wide trailing stop, I'd probably be giving it the benefit of the doubt for the moment. But I'd be having to think about, look, where do I say enough's enough? Where do I say it's no longer working? It's getting close to that point where I'd be considering this probably should be an exit. It's not a buy for me. It'd be one I'd be starting to say, okay, it's now getting close to where I'll say goodbye and move the capital elsewhere.
Okay, thank you. We'll have a look at URNM if that's okay. Uranium.
Okay, so there's let's start. We'll start with the US listed one. Got more data on it, and I've got some of this myself. I bought it on this pullback to the moving averages in I think it was in December. I'm happy to hold this at the moment. We've got an upward trending market at the moment. The moving averages are up. It has been stretched above the averages, and we're getting the pullback now. So the pullback now, it's not surprising. It's like the volatility can be disconcerting at times, but when you when you put it all in perspective, look at the rally and then look at the pullback. The pullbacks, like you can put some Fibonacci's on there just to give just to give perspective on the pullback, and you'd say, look, if we use the mid-December low to the recent high. It's just come back to the top of the Fibonacci range, which is like a proportional type of pullback. So all that's okay. I've got, as I say, I've got this ETF. I've got the ASX listed one, but I've got the URNM ETF. I've got some uranium stocks. I'm happy holding them. It looks like we've got a trend in the uranium price, which is moving upwards. This is a sector I'm happy to be on and happy to stay on at this point. Coming over to the local listing, you can see it looks pretty similar. It's going to have some currency difference. The reason I look at the US one is you can see it doesn't go back as far, the local listing. But yeah, at this point, this is an uptrend that's consolidating. Let's see how the consolidation plays out. It may present a buying opportunity. Probably wouldn't be wading in just yet to buy, but certainly happy to keep holding.
Okay, thank you. Let's have a look at Dennis's. Hi, Dennis. GRL, please.
It's what we'll start with what I don't like. I don't like that it's given back the gains as quickly as it made them. So it hasn't had that interest in buying really the dip. It's also a low price stock, and we know these low price stocks are prone to erratic behaviour. Like you look at some of its performance in the past, like big rally, and then it quickly comes back to earth. So it's got some form at doing this sort of thing. I wouldn't be buying it if I bought some at lower levels. I like what they do. Yeah, look, I could continue to hold this. I'd risk giving, like there was a good initial gain there. I'd risk giving the whole thing back for the sake of maybe staying on something which has got a lot further to go on the upside. If I like a particular stock and I wanted to stay with it, I could give it that more room to move. But I'd have an exit point. If it's back down at below 2.5 cents, back down to 2 cents. It's like, well, I just don't want to keep holding and hoping it's going to sort itself out. I think if it's going to find support and do well, it's probably around those moving averages. This is probably where it needs to get its footing and hold the line, establish itself or will re-establish itself or stabilise, I should say, stabilise above the moving averages and then start to have another go at moving higher. But I think this is probably an important area around this 50-day moving average. Hold for now, but also consider where's the exit point, where do I say enough's enough?
Okay, thank you. Hi, Duncan. Let's have a look at PLTR. US stock value.
Starting to break down. I could give this probably, let me just see, how far is that from the high? 30%. It's getting close to where I'd be ruling off on this one. Let's just put an ATR stop on it as well. Yeah, so the ATR stop would give it a little bit longer. I'd be okay with that. Yeah, look, I could give this a bit more room to move around, but I don't like these moving averages turning. And if we start sort of like seeing the price action really just not being able to rebound and getting that shallow sort of consolidation below declining moving averages, then that really does open the prospect for then the sharp selling to come in. So look for the shallow bounce. The shallow bounce is a warning that it's there's an example of the shallow bounce, the shallow rebound, and then the hard selling, the shallow rebound, then potentially the hard selling. That's what we've got to be aware of now. So know where the stop is. It's certainly not a buy. It needs to quickly stabilise and get above the moving averages to disengage the sell cycle. That could happen. That's why I could give it a little bit more room to move. But just be aware that the structure's changing, and I think we want to know where our exit point is and be ready to action it should it continue to deteriorate.
Yeah, fantastic. Hi, Rob. Let's with AI.
And Rod, you can see it like subdividing here. So you've had a hard move down, a shallow consolidation, another hard move, a shorter shallow consolidation, a faster and deeper move, and now like it's a shorter consolidation. It does continue to like it's that waterfall type structure which can really give way. It's one to be wary of.
Needs to be careful. That's obviously been quite the hot stocker in the US PLTR, so yeah, it's got to be a bit more mindful of it now. AI trends, I thought would be something to have a look at around IT security becoming more important. As always, let's have a look at hack, HACK. What do you think? Keeps disappointing despite our need for it.
Yeah, well, it's got that same structures as stock we just looked at. It's got that waterfall structure to it, which continues to accelerate to the downside. Um, yeah, I noticed there was no, the US one's probably it's an ETF. Wonder whether it's the same one. I don't know. I don't know. We'll focus on the local one. Yeah, it's it from its January low, it's done really well. So it's only really been disappointing since October. Uh, ETFs are a bit different to individual stocks because an ETF is going to have, like, of course, going to have a collection of a number of stocks. So some people will hold ETFs longer term and just go, look, this is an area I want to be in long term. I'm not worried about the pullbacks along the way. I'm just going to hold it for the next 10 years. In which case you might look at this in the next 10 years and you can barely even see this pullback because the price has gone so much to the upside. But we don't know. There's if you're long term and you like an ETF long term, I think that's probably fine. It's not the sort of ETF I don't think this is an entry point at this stage. It's not where I'd want to buy. I'd want to buy like consolidation along the moving averages and a breakout rather than just buying as it's falling, because look, it could go through a tough phase where it's just out of favor for a year or two. Like that's a 1 year period where it was just out of favor. You can get that. So I don't think it's a one to step in and buy at the moment. But depending on your time frame, whether you're long term, whether you're just trading it tactically, if you're just holding it tactically for maybe a year or two while there's a trending phase, well then its structure's now deteriorating. Maybe be a case of like moving it on, because it does do the technical damage that, like, it probably takes time to repair that damage which is done. So if you're not into hanging around for another 6 to 12 months maybe while it repairs, maybe it's a move on. So it really depends on the individual situation, what they're trying to achieve. But at the moment, yeah, that structure has changed. It doesn't look like it's going to be an ETF that delivers in the maybe at least over the near term, the next like 3 to 6 months.
Yeah, thank you. Hi, you King. Let's have a look at FMG.
Yeah, it's still holding its upward trend. Like the iron ore prices come back, and that's why we've seen. We looked at Champion Iron CIA earlier, and we've got the same sort of pullback, but not as large in Fortescue. I've got some of these. I'm happy holding it. With these moving averages still generally continue to move higher, although 50 started to roll over a bit. It's like it could be a case that we get some sideways consolidation followed by a break higher in the months ahead. That's entirely possible. So I'd be inclined. Well, I am continuing to hold wide stop and see whether support buying of the dip starts to emerge around current levels. Probably don't need to be in a hurry to buy it at this point. I'd like to see it rally off the averages, start to stabilise and establish above the averages again, and then a secondary move upwards, and that could be like the time to buy. So I don't think there's a hurry for buying or adding to a position, but I think it's okay to continue to hold a position at this point. The general momentum does still appear to be the upside.
All right, thank you. High Wish, let's have a look at MYG, please.
Oh, sorry, what was all that, Rog?
MYG.
Yeah, look, trend here is up. It's been up for a while too. It's been a stock that's behaved nicely, like rally, sideways consolidations, rallies again, several sideways consolidations, and it just looks like we're in another consolidation phase at the moment. I'd be happy holding onto a position in this if it can. We can get maybe we get some. Oh, look, I don't know. If we get some more like consolidation below the high and then get another break up, there could be another entry point into this stock. But yeah, certainly one to hold at the moment. Probably not buying it just now because this consolidation could continue to stretch out for a little bit. But it is sort of getting to that point where look, buying the dip in this stock has been successful. I guess it could be considered at current levels as a buy if someone particularly liked it, and maybe looking at a look. I just don't think I'd be a buyer at the moment. I'd probably rather wait to see how the consolidation see if a consolidation plays out. Maybe that could give us an entry level, but one I'd be wanting to keep holding.
All right, thank you. Hi, Elizabeth. We've already looked at LTR, Liontown, so I think you should have been on the show while we looked at it, so hopefully that's been satisfied. Let's look at ALSs, please, which is UUUU. No, sorry, ALS is the username. It's go back, delete. UUUU.
Right, energy fuels. Wonder whether this is uranium. I think it is. I think it's uranium orientated stock, although I'm not sure. I'd be hanging on to this one if I had it. Trends in place, rallying off the averages. A bit of a pullback towards rising averages, but yeah, look, it's an upward trend. Whether there's going to be whether this is from the high in October, this could still be part of a large consolidation that has more time to play out. Like we could see this continue to track sideways for a bit, and then maybe it breaks higher and later in the year. So there's we can never be sure of the where it's going to go over the next few weeks. But whether it be, look, I think there's a decent possibility there's some more consolidation coming, but I'd be wanting to hang on. I think it's the overall trend remains up, and if it is uranium orientated, that trend in uranium is giving the indications of being up as well. So it would be staying in the right, possibly in the right sector in a stock which is trending.
All right, fantastic. Hi, Jimmy. We are using TradingView, which is good. Great bit of software. Let's look at ASX, please.
It's it's had a rally, but it's still in the downtrend. Look, it's moving averages is still pointing lower. I'd just leave it alone. And like for example, you can see some of these previous, like it's had strong rallies in the past, which haven't led to a turnaround. It's been below declining moving averages, and the rallies were ultimately sold. So it's not to say the same thing has to happen now, but you can see how rallies back to declining moving averages are often a selling point. So is the same thing going to happen again now? I don't know, but it's too early for a buy for me. It needs to establish above the moving averages. Moving averages need to turn. So there's still a few things that need to happen before I'd consider this as a buy. The first thing is like, can it hold on to its recent gains? So we get a situation where we look at it in several weeks and we're started to get this sideways movement. The moving averages have started to turn higher, and then we get like a secondary rally, maybe that's where I'd start looking at it. But at the moment, I'd just say, look, it's too early, and we've seen this sort of move before not work out. So there's just not enough lining up just yet. By all means, one to keep an eye on for that potential turnaround, but I think it needs to do a little bit more just now.
Thank you. Hi, Headley. He appreciates our work, Jason, and we appreciate you being here. Thank you very much. Let's have a look at VAU, please.
VAU?
Yep. V for Valerie.
Yep. Yeah, great having Headley on the show. Headley's a regular in my strategy sessions too.
Good to hear.
VAU. Well, we've got this sharp pullback, but it's still within an upward trend. So you just got to keep everything in perspective, and you look at how far VAU has rallied. So just since August at 233, it's more than doubled. So the volatility we're seeing on the downside is within character of the stock, and we've seen the same sort of move before, where it's pulled back swiftly to the 50-day moving average. It's not a stock to be buying at the moment. I don't want to buy into this downward volatility that we're seeing across some of the commodity orientated stocks. But I'd be happy to, if this was in my portfolio, and I've got stocks in my portfolio which do have these volatility characteristics, I'm happy to hold them whilst they're above their trailing stops. For Volt, the motion traded trailing stop is going to be below the 100-day moving average. It's probably going to be down around, maybe around $4.24. So it's probably still a way off. And the reason for that wideness in the stop is to see off. It's to see off these bouts of volatility that we periodically get. Look, at some point, those larger corrections come in, which trigger stops. Like, we only know that in hindsight. But at the moment, at this point in time, this is just a pullback to the moving averages. But then time will tell whether it can stabilise around here. That's the next thing to look at. Next thing to look for is, can it start to stabilise around the moving averages like it has during this October period? It's that stability we're looking for, because then that can set up the platform for another push higher. It's one to watch and see whether that price action starts to deteriorate. But at the moment, as I say, Rog, it's a pullback within an upward trend.
All right. LDYTB, hello. We want to look at some oil and gas stocks. We'll just do WDS, please. How's it looking?
Yeah, it's starting to look interesting. I've got this coiling pattern, which we can see, because oil price is looking interesting too. So I've got this nice clear coiling pattern. Is this going to work out to be a platform for a push higher? That's the interesting question. It's lengthy declining phase, and now we've got that initial rally last year, strong rally, and the strong rallies often lead to a period consolidation, and that consolidation has been into this compression range. It's looking tempting to think about it at current levels. So, like, say it was bought at current levels, a stop could be placed below the recent low. That's about 12%, and that's below the December low. So 12% of, say we had 12% risk, and like if it moves back to previous highs, that's an asymmetric sort of play. You've got a multiple of the potential risk. I usually don't like to preempt breakouts, because often when I've preempted breakouts in the past, thinking it's going to break one way, it breaks the other way. So you just never know. You can't be sure which way it's going to break, and it's not like this is part of an established trend where it's trading sideways after trending higher for many months. It's really, we're looking for a turnaround situation. But look, it is interesting, particularly if it starts to get established above the moving averages are now starting to turn. If prices were to become established above the moving averages and then start to break higher again, maybe that would be the time to consider Woodside. Yeah, very interesting one, I think, Rog. And I think looking at the oil stocks generally, looking for these patterns, seeing if we get upside breakouts, if the oil price can continue to establish itself above its own moving averages.
Yeah, fair enough. All right, let's look at Hi Mick. Let's look at FBU, please.
It's it's trying to turn into an emerging trend, but hasn't really been able to. Hasn't quite done it yet. It's like we've got the moving averages trending up, and we're getting there's a strong rally that's a shallow consolidation, but it's not really getting that sort of like breakaway momentum developing. It is trying to work its way higher. So yeah, look, if I had this in my portfolio, if I'd bought it recently as it started to break higher, I'd let it sit in my portfolio and see whether it can really get some momentum developing. I probably wouldn't buy it today if I didn't already own it, just simply because it's been at its highs and it's pulled back. It hasn't been able to get some more momentum, as I've been saying. Like if I was considering buying it, I'd probably want to see maybe it just hold those moving averages and then start to push to a new high, and that could be a buy trigger maybe. But if I was holding it, look, I could keep doing so. Stop back down below the moving averages, give it plenty of room. It'll be interesting to see whether this can actually, is this a big basing phase? And if that's a big basing phase, you'd think that that base could support considerably higher prices, but it's just got to really got to kick that momentum into gear, which it hasn't been able to do yet. So it's an interesting one. I think it's got potential. It's got to pick up that momentum, though.
All right, fantastic. I think we'll leave it at that for this week, actually. But before we do, Jace, keep the chart up, sorry, because there is obviously there's going to be some beginners on this show and a lot to learn, obviously, in one shot. And because of what's happened with the commodities over the last few days, we might just touch on one final one for a couple of reasons, just so we can see how to continue to manage it and finishing off this show. So let's bring up XMET, and that is from Leader. Funnily enough, that's my mother's name, so great name. Being new to investing, let's just have a look at this and let's help out a newbie here. How do we manage this now after it's been bought and then it's dropped a couple of days later? Dropped quite sharply, obviously, for obvious reasons.
Yeah. This is one of those ones I would have suggested caution in buying, because it has been stretched above these moving averages, and when something's stretched above the averages, we often see the pullbacks and the sharp pullbacks too. It's an interesting energy transition metals. That's an interesting ETF. I haven't seen that before. Um, like this pullback here in October looked pretty scary too at the time. Things got a bit stretched and then it's quickly pulled back. But then as a bit of time's passed, we can see that the dip, it's got that zigzag feel to it. Then we've got the dips being bought and stabilized above the moving averages and then being able to push higher again. We couldn't rule out the same sort of thing happening here. We could get a bit of a rebound and then a retest of the low, and it just gets messy for a few months before then turning higher again. So I wouldn't be saying, look, it's all over for this ETF just after a two-day sell-off. Plenty of hot money comes in at the top and it gets shaken out when you get the pullback. But if it stabilise around the moving averages, or not, or above the 100-day moving average over the next few weeks or few months, that potential for it to re-engage to the upside could develop. It's not the sort of ETF I'd look to buy now. I'd want to see the price action, how it starts to unfold. Do we get this sort of feel to, or this sort of structure that we got in October, November, or something similar or different? Like what do we get? At the moment, we've still got rising moving averages. It's a pullback, but it may take time to work off that, the sharpness of the ascent, and then the sharp decline might now need to go through a stabilizing phase. We've got to think about our risk as well. Where do we get out? Where do we say enough's enough? That's the harder part. If someone's bought up near the top, it's already down 21%. How much do you give it? ETF or individual stock, are you going to have like a point where you say enough's enough? And that's hard. I can't give that. I don't like it. It's hard if you buy something up near the top and you go through like a large downward phase. Like what was this one? That one was 23%. It's not as steep. So look, I'm not sure on the exit strategy around this for someone who's bought near the peak. I guess I'd be watching the structure. Do the moving averages start to roll over, and then price ends up below the moving averages? Do we end up with this declining moving averages and price below the moving averages? That's where the structures change. And I'd be thinking, look, maybe I want to move this one on. But as I said about ETFs earlier, there can be different ways people play ETFs, depending whether they're long-term or what they're doing. So it's a trickier one, Rog, to come up with the exit strategy. But at this point, generally, I'd say that upward trend remains in place, but there's just volatility around that trend.
Yeah, all right. So I think the main point is just to monitor the price action if you are trying to manage this at the moment, isn't it? Just monitor the price action, and if the price ends up underneath the moving averages, then there might be that opportunity to move on. But yeah, for now, it's just on the moving averages. It's still in a trend effectively.
It's monitoring the structure. Volatile pullbacks towards rising moving averages, often can work out okay. It's when the structure flips from above moving averages to below moving averages, and moving averages are declining, and lower lows start to follow. That's when we say, look, this is now a structure with risk weighted towards the downside. That hasn't happened yet. That's what we need to look for. That will take a little bit of time if it were developed. That's not going to happen in the next couple of days either. So it's one we can come back to in the coming weeks and see how it's developing.
Yeah, for sure. All right, thanks for that, Jace. Thank you, everyone, for once again a great number of tickers to go through, and a great the opportunity for us to not only provide other people opportunity, but the ability for us all to learn once again and reconfirm and reaffirm what we know, or what you might be new to this and might be learning. Right. So as always, if you are new to this and you do want to learn how to read the price charts the way we have and the way we teach, then go ahead and just check out the playlists on the YouTube channel. Go to the playlist section. You can see like 28 weeks of education and we take you sort of step by step each week, right? When we first started this 2.5 years ago, and the fundamentals in that regards don't change. They're all the same, right? So the other thing is you can go and check out motiontrader.com.au. Jace offers a lot of education there. And we're Selfwealth, and we offer a lot of education in our ways as well. And obviously, we're the brokerage, so that's how you enter into your trades at a fixed price cost of $9.50. So that's enough for the plugs, though, Jace. Thank you very much once again, everybody. Don't forget to like and subscribe if you haven't already done so, and write us a nice comment down the bottom below there. Thanks, Jace.
Yeah, thanks, Rog. Thanks, everyone, for joining us. It's been fun as always. Enjoyed going through your stocks, some interesting names there. And next week, Rog, we'll be back and do it all again.
We shall be. We should be back once again next week on Tuesday at 12 p.m. Australian Daylight Savings Time still. See you later, everyone. Have a great week. Take care.